Here to keep your portfolio advancing along with the stock streak are Randy Bateman, President and Chief Investment Officer at Huntington Asset Management, and Adam Bold, CEO of the Mutual Fund Store. Good to see you both. Randy, first to you.
Thank you, Dave.
It just seems unstoppable. This body. There are so many walls of worry that has climbed over already, whether it's Greece or the deficit here in the States. Is there anything that's going to slow it down?
You know, there will be a reckoning, but it's not going to happen this year. There's no question that we...
The whole year, you think?
The whole year. I think we've got a lot of good things happening. Corporate cash flow is very, very strong. And as you know, from corporate cash flow comes dividend increases and stock buybacks and merger and acquisition activity. That's going to help my industry an awful lot with the small caps. But there will be a reckoning. And as Warren Zevon once said, send lawyers, guns, and money. I'm not sure there's going to be enough in either of those categories to solve our problems long term here.
Yeah.
Well, exactly. Adam Bold, do you feel that way, though? Do you think that things line up exactly as Randy has talked about, where corporate earnings will start to move, hiring picks up, and all will be well? Something tells me you don't see it that way.
Well, I do think that the markets as a whole will move up, but I do think that this is more than any time we've seen in a long time, really a stock picker's market. The reality is we did have a recession. We did have a bad economy, and some companies responded better to that than others. And as the economy gets better, and I do believe that the recovery is for real, there are some companies that are going to do better. So I think this is a time when, yes, we have an opportunity for wonderful gains in the stock market, but I also think that this is not a time when you want to be buying index funds where you're buying everything that's out there.
And Randy, the government is building up such a debt, it is going to have to borrow so much in order to pay its expenses. Doesn't that crowd out the private sector and raise interest rates? And aren't we going to have to deal with that?
Absolutely. I think we've got to raise $2.4 trillion this year, something like that. It works out to $100 billion every 10 days. That is going to crowd out an awful lot.
Big float.
You know, we got into this mess because of excess debt on the consumer balance sheet.
Now it's
kind of ludicrous to think we can get out of it with new debt on the government balance sheet.
Hey, let me make a point. Let me make a point in regard to that, though. Clearly, you know, I get a lot of clients who call and they go, or callers to my radio show, and they go, Adam, the debt's out of control and the government's got to raise all this money, and, you know, clearly that's going to mean the demise of our economy. And the reality is we can all say, yeah, I don't like the way that the government's spending money in Washington. I don't like, you know, they're doing things differently than they have in other times when things have been great. But we do not live in a vacuum. And really, when you compare the strength of the U.S. economy and our ability to weather that compared to anywhere else, I still think that we are the last bastion of safety and security in the world.
We will weather it. The point is that interest rates are going up. It's that simple.
And Adam, what does that mean? And you're looking at your picks right now. Maybe you can explain to viewers why you like these. A lot of them are what ETFs here. You've got the 21st Large Cap Growth Fund, Morisco. You've got a Small Cap Growth Fund, a balanced fund as well. Why?
Yeah, no ETFs. These are actively managed, no-load mutual funds. The Morisco 21st Century Fund is a large company growth fund. It's run by Corey Gilchrist. And, you know, he's looking for companies who are growing their earnings faster than other companies. And those are going to be the companies that have led the way out of the recession and will continue to do so.
All right, we got to get Randy in here quick because we're running late with your stock picks. I see Trinity, Red Hat. Why do you like Trinity, for example?
Trinity is going to play with this infrastructure build. There's no question the fact that they're in a diversified set of industries, headquartered in Texas, oil containers, rail cars, rail leasing.
It's up 5% today, by the way.
And it's been a horse in the last couple of weeks. Something's going on there. I don't know exactly what. It was dormant for a while. It's coming back real strong now.
Guys, thank you
very much.
Good to see both of you. Randy Bateman, Adam Bold.